Aloha, aloha, aloha. Thank you, ladies and gentlemen, for taking the time to watch this video. My name is Brent from ihavesuccess.com, and I'm going to be upfront with you. I have no idea how long this video is going to last. It might last 5 minutes. It might last 15 minutes with video 1, 2, and 3. I'm not 100% sure. What I am 100% sure of is we're going to be listening to this. The interesting thing about this is that I have no idea the exact implication of this standard YouTube license, the impact it'll have if I play this while recording this video. And what I want to show you is my Options Express account that has a whopping 94 cents in it. And what's great about this is I'm going to show you how to sell put options with barely any money in your account. Now, to do this strategy, you will have to have enough money in your account to open an account, and depending on where you open it will depend on how much you need. But there's some pretty cheap places, and I think you can probably find a online brokerage where you can open up an account for $500. However, I think 1,000 is the minimum that I use. If I have $1,000, I can start selling put options, generally speaking. And $2,000, even better. So let's say for this, you probably need about 500 to get started. But with 1,000 or 1,000 to 2,000, that's really your optimal low end starting number. So once you open your account, you're going to go look at option chains. And depending on the environment that you're in when you're doing this will determine and the environment you're in and how much money you're using. So obviously, as we began this, we're talking about lower amount of money. And I think the environment we're in, gold is good to sell put options on. I like AUI because it's relatively inexpensive stock, and I think that it's a company that's going to stay in business. And yeah, there are other gold mining companies that are probably a little safer, but maybe they're a bit more expensive, and this allows us to get exposure to the market at a very low price point. You know, for example, let's say we were starting with $1,000 to $2,000. The first thing I want to do is I'm going to look for about 45 days of expiration. If you don't know exactly what some of this stuff is, then you need to follow up with your own YouTube videos, and with not making your own YouTube videos, but follow up on YouTube with other videos, search for phrases and try to figure it out and learn from researching on YouTube. But anyways, I'm looking for about 45 days of expiration. So let me check out in January. $36 days. Well, let's take a look at 36 days. What I'm looking at is this right here. This tells me I get 9 cents. And all these contracts that I'm going to sell are in 100. So 9 cents times 100 is $9. So this tells me I get $9 for every contract I sell. My commissions, I would probably have to sell 2 to 3 contracts in order to make any money at all at $9. And to sell 2 to 3 contracts, that would tie up 500 to 500 for 2 contracts, $500 plus commissions out of that. So you're gonna tie up 500 and maybe lose $10 going in, and then tie up $5 and maybe lose $10 going out. You take in this premium going in, so well, maybe you need 4. Maybe if those numbers don't work out, I'm gonna look a little bit further. Instead of January, maybe I see if I can sell a little more time. Still only taking in $9. How about if I go all the way out to April? That's a far cry. But I would take in $25. I would tie up, same thing, 500 to well, now if I just tie up 250, I take in 25 minus 20, a $10 commission going in, minus $10 commission going out. You know, I make $5, but it takes me 127 days to do it. And so what's happening here at this 250 is that I'm telling someone, which is basically Options Express, I'm placing an order, letting Options Express know that I'm willing to buy 100 shares of AUI at $2.50 share in any time between now and 127 days into the future. That part I don't really, actually, you might want to clarify that on that detail, but it's like if in 127 days, if AUI is 1 penny below $2.50, not right on $2.50, 1 penny below, then I'm obligated to buy 100 shares per contract I sell. So that's why I'm getting paid this $25. We're selling some insurance saying if this stock crashes below this price, we're going to buy it. Whoop-de-doo. There's a lot of videos on YouTube that talk about that will explain the concept. So now, this is how you could do it though, and now the next thing we're going to do is re-up the music and then go back here. So now, what have you learned? You learned about AUI. Granted, this is 12/14/2016. I think AUI is like I'm personally, I've been trading AUI. My account wouldn't say 89 cents or whatever if I was still trading, and I would actually, yeah, obviously, right? But I pulled my money out to put it into a mini mart. So, anyways, if there was $1,000 to $2,000 in here, this is the stock I would be trading. So, and I would probably be trading this all through 2017, and this is why. And what I would do, let's say if I didn't have any charts, like I don't have any charts right now, the next thing I'm going to do is I'll say, well, what's my risk? If I don't really want to own the stock, which is not that big of a deal, but let's say I really don't want to, or I want to at least know what the chance that I'll own it is. I go under detail, and I go under probability, and I look at these probabilities. So the probability of AUI expiring above $2.50 is 54%. Now, that's really not the greatest percentage, but yeah, it's not the greatest percentage. So let's just test something out here. Let's drop it down to this one. Let's look at the probability here. Oh, snapples. Sorry about that. Detail. There we go. Okay. Expiring above. 76%. So it's so much less likely that this will expire below $2 than $2.50. But yeah, the payout is here. Now let's say it does expire below. Well, why would I be comfortable with that right now? I would be comfortable with that because overall, I really believe gold is in a bull market. If you want more information on that, go to YouTube and search it and see what you think in 2016 going into 2017. But number one, that's one reason why. So what that means is I think that I'll have an easy time selling it. So let's say if I do buy it at $2.50, I can immediately start doing the opposite. Now I sold call options, which is like insurance, to acquire the stock. Now to get rid of it, I'll sell this. I'll take in $34. For this, it would be in in this scenario, it's still 100, way longer expiration than I really want, but taking $34, you hold the stock, and you're taking in $34 for 127 days, so it's like renting it. And what might happen is that you might end up selling it for $3, and you get to keep this money. So you make 50 cents, and then you go back to doing this. And there's also a chance that you don't buy the stock, and you don't have to do all that, and you just sell the next month out. So it's relatively safe. The thing about this type of market, though, is that the whole stock market in general, I believe, is at a top. And that's kind of why I like doing AUI on a gold stock, because it's really more at the bottom already. And so if the stock market were to go down and gold stocks go up, it's more likely to do because the stock market is at all-time highs and these gold stocks are at all-time lows. So I think it's pretty legit. And you can do this for, obviously, you do the math. $1,000, you can sell one contract. And if you have no skill, if you've never done it before, just sell one contract. Put $1,000 in there and sell one contract. Don't trade more than 10% of your account value. Because in this scenario, even if you did one contract right here, you'd make $5. You'd make $5 in 127 days, and that's not the ideal thing, but you would have been successful, and you will learn. Your ideal timeout is to do it around maybe like 45 days. So, but you would be learning, and I think that just this, the main thing, you balance those things out, you look at the probabilities, you look at how much money you'd be making, and the time that you'd be doing it in. And maybe I would decide that I wasn't gonna sell this 127 days. Maybe I would decide that because I'm already so close to this expiration of December. Maybe I just wait and let some of this time go. I don't know. You got to play it by ear. And it's not really you have to play it by ear. Honestly, what it is what ends up happening for me is because I'm not in the market right now. As you saw, overview, there's no money in this account. So I'm not in the market. When I'm in the market though, every day I'm looking at this, and it's really easy. And that's why I think everyone should do it. If you have a bank account, I think you should be doing this. So I had a great time making this, and I think that anyone that is as excited and passionate about learning how to sell put options as I am and I was, I think that you should have gotten some value out of this, and I know everyone will. So with that, it's time to upload this video. Thank you very much, and we'll see what happens with the what do you call that? the license. So I gotta go.